Hey everybody, what's going on? It is James here with Crypto Common Sense, aka Three Peaks Trading, and now also the Quiet Quant. So I started a new community. I'm going to go ahead and plug that because it is absolutely free. It is called the Quiet Quant. And essentially what I'm doing over there is I am trying to help people get their feet wet and get in the trenches and actually start trading and beating the market, hopefully. And I'm doing all that for free. And before anybody says, why would you do that? Well, A, because one of the things that makes me feel good about myself is giving back. B, because the best way to get somebody to eventually become a subscriber of my more expensive software and tools and things like that is to help them make money. If I help you make, $500 a month, and then I say, hey, you want to give me $100 a month for this thing? That's a much easier quote unquote sale than just saying, hey, give me $100. So A, I'm doing it because it makes me feel really good. And it truly does. One of the things about trading that I don't like is there's no real dopamine hit from it. It's just kind of like, a means to an end. I really like seeing other people succeed. It's why even when I was really successful in business, I always try to teach and give back. And I really enjoyed, doing coaching and things like that. So I want to do this community. And the way that I'm building this community is every time it reaches a milestone, I'm going to release a course. So right now there's a number of courses I have planned. The first one is a risk management course. It unlocks at 50 members. We just hit that today, so I'll be adding those videos later this evening. We're going to be unlocking money management. I don't think I'm going to wait to 100 members on this one because I kind of go hand in hand. And that'll be releasing trading psychology at 200 members, technical analysis, real technical analysis, not the bullshit that's taught online that gets retail traders in trouble at 500 members. And then the Quiet Quant playbook is a bunch of setups that I created. And that's probably always going to be behind some type of paywall, just full transparency. Check the description. There'll be a link down there. You can join the community. Again, it's absolutely free. It costs nothing to join. The only thing it costs you is a little bit of participation. I ask people to participate, drop a like once in a blue moon, leave a comment, that type of thing. So yeah, check that out. Back to the chart itself. I did a video. Oh, when did I do this video? 11 days ago, did a video talking about this specific range on Bitcoin, saying that if it could sneak above this range high, that it may have a move toward the bottom of the range and store. Well, guess what happened? It snuck above that high and has moved back down almost $10,000 of Bitcoin from its peak here, about $9,500. The thing about this, guys, is this is not surprising. And it's not surprising. It's not like I'm a god YouTube talking about hindsight. Well, yeah, I could have saw that happening. I did see it. I did a video on it. I talked about it. This is how markets move. Everybody's getting super excited about the move back up, thinking the bottom is in. It's going to go up to a gajillion dollars, right? All the perma bulls start coming back out. But the reality is what I said in the last video was that we just had a drop. It moved down 36%. And I said in the last video, it looks eerily similar to what happened back in 2021 when we had this initial drop back here of 38%. I said after that, the market needed time to digest the move before it made up its mind what it wanted to do next. And I said we're probably just going to be ranging while the market digested the move. And we have been ranging ever since. And the thing is, most people don't understand how this works. Trading is not, it's not near as complicated as people try to make you think it is. Trading is all about understanding the context of the market. Are you uptrending? Are you downtrending? Or are you sideways trending? In other words, are you in a range? Those are the only three states of a market: up, down, sideways. When you know the state of the market, that tells you what trades to take. If you're in an uptrend, for example, and you see a pullback, you know, hey, this is a pullback. I may want to look for opportunities to go long. If you're in a downtrend and you buy a pullback, for example, right here, you could scalp it if you know it's a downtrend. You could say, hey, it's a downtrend. I'm going to play the bounce and just do a quick scalp. Cool, no problem with that. But if you think that you play this trade the same way you would play a trade back here, well, no, that doesn't make any sense at all. This is an uptrend and this is a downtrend. So just understanding that the market was downtrending tells you how to play that trade. If you're in a range, the same thing is true. If you're in a range, when you get to the top of it, your bias should flip to the short side, especially if you entered that range from a downtrend. Because the most likely scenario, not 90%, not 80%, but probably about 60%, the most likely scenario is it is a consolidation, which is also known as a redistribution pattern before more downside. If you're uptrending, it is a consolidation known as a re-accumulation pattern before more upside. So just understanding the context of the market already gives you a wonderful edge. There is no secret sauce. The secret sauce is understanding the context of the market. And what I do is when I'm trading, I take context in the market that gives me a general idea of the direction the market should head. And then I use these rules, the quantitative stuff. I use rules and algorithms to decide on when I should enter a trade where the potential reward makes sense compared to the potential risk. That's what trading is. Trading is really not about predicting where the market's going to go. It's about seeing an opportunity and then knowing whether or not you can capitalize on that opportunity, knowing what to expect out of the market. So for example, in that last video, maybe not the last one, but this one I'm referencing over here, I believe, and it may not have been in that exact video, but my gravitator indicator, which is a history of being crazy powerful, like calling the bottom in November of 2022, I said, I don't trust this particular alert because it's happening in a context where the market is moving down. And so what I expected was just a pause. I didn't really expect this alert to play out into a new uptrend. It may work out still. I didn't take a trade off of it, but it may work out still. Somebody, thinks this has a bounce on it. What they would do as a trader is they would decide, like, what can I get out of this? So maybe they're looking for a 2-hour bounce, something like this, in which case it hasn't got it yet, but it might. But another thing that people will sometimes do that is perfectly fine, if they're trading against the trend, they may not go for 2R. They may say, you know what, I'm going to scalp this for a 1R trade. Just get a little baby bounce and then maybe it goes down more. And somebody that did that, for example, they would have had a trade that looked like this. And guess what? Bam. That person's already out. They already hit their profit target. See, that's trading right there. It's totally different from analysis. You can be bearish on the market analysis and still find opportunity for a trade. Again, I didn't trade this. I don't actually trade Bitcoin, guys, like at all, really. I tried to take a short on it. I think it was last week when it was up near the top of that range. I went over to Coinbase and I realized that I only had like $187 available to trade with on there. And so I couldn't even take a short because I didn't have enough margin or capital available to take like a future position. So I did actually try to take a trade on it, but I did because I didn't have the money and I didn't feel like transferring money from the bank and all that kind of stuff because I just never trade over there anymore. But I want to do this follow-up video because, again, what's happening is not surprising. And if you're listening to people on social media and people who, are self-proclaimed gurus and all this nonsense, were they right? Were they screaming bull, bull, bull? Or were they screaming bear, bear, bear? I don't know. But pay attention to what they're saying and try to find out why they're saying it. Because being wrong doesn't mean they're a bad trader or that they're a bad analyst. Like, I'm wrong all the time. Like I say, 60% is like, I'm trying to shoot for about 60%. But what you want to uncover is why did they make the prediction they made? Why were they bullish? Why were they bearish? Were they bullish because they're just a perma-bull and they drank the Kool-Aid? We all know how it ends when everybody starts drinking the Kool-Aid. Or were they bearish because they're just a perma-bull and they're looking for $2 Bitcoin? Or was there a reason that they specifically pointed to in a chart and said, look, this is what the chart is saying. This is the technical analysis side of this. Or, hey, this is the quantitative analysis side of this. What were they using? And somebody in my Discord posted some stuff last night that was from this AI. I'm not going to name the AI because, as always, I don't feel like going to court when I call all these people out. But this particular AI is blatantly violating laws related to financial advice. It's literally an AI that's spitting out recommendations and spitting out recommended positions and all this kind of stuff. And when I looked through, like, it looked really fancy on the topic. At first, I was like, oh, this is pretty cool, right? Like, it's quantitative analysis. But when I looked through everything that the thing did, It was all the most basic, silly, like non-alpha stuff, just noise. And one of the things this AI did was like analyze options flow, like how many people were buying calls versus how many people were buying puts. So I want to just kind of use this as an example. You guys and gals, you got to stop buying into this bullshit myth that everything can be boiled down to something so simplistically stupid. The number of people buying calls and the number of people buying puts does not matter. And you might be saying, well, yes, it does. No, it doesn't. Because when I buy calls, that might mean that I'm bullish, or it might mean that I have a short position that I'm hedging temporarily. It doesn't actually mean anything because you don't know what other positions that person is sitting on. Maybe that person is short-term bullish, or maybe they're actually opening a vertical spread and you don't know that. Maybe they're doing something like selling premium. You don't know that. You don't know the motivation behind the trade. Another thing that I often see people do is use moving averages, and they trust moving averages like there's some kind of savant. Now, I use moving averages. You see two of them on the chart right here, but it's not the moving average specifically that I'm watching. It's how price reacts to the moving average. What happens when price touches it? What happens when the moving average is crossed? Does volume pick up? For example, one of the things I said in a previous video is back here, this fake death cross was a great buying opportunity. One of the reasons we knew that is because look at the huge spike in buying volume right there. This was a trap, a bear trap that made for an excellent long position. Over here, when the cross came, I said a few days ahead of time, watch it. If there's a huge spike in buying volume, we'll know it's probably a trap. If there's not, it's probably going down. And what happened? It crossed. There was no pickup in buying volume and the market rolled over. You have to go more than surface level. You've got to go deeper into what's actually happening. So to zoom out a little bit on Bitcoin, this is the weekly chart. And this is a valid channel. It doesn't guarantee we're going to the bottom of it, but this is a valid channel that I personally feel like is worth paying attention to. We can see here that it connected in 2017, connected in 2021, and then touched again in 2025. The bottom points were connected. These pivots were back in 2022 and 2023. Okay, nothing before that. So to me right now, if this was a 5-minute chart, I would just think this was a channel with the most likely outcome being a move down, consolidation, and a further move down toward the bottom of that channel. The bottom of this channel right now is about 55 to 60,000, but it's going to take time to move there if it moves there. And so, it's going to be moving up all along the way. $65,000, somewhere in this ballpark, is probably where it's going to hit the channel if it hits it. Doesn't guarantee it's going to stop there. Again, we go past the surface level. The surface level is, hey, there's a potential channel. If it gets there, then I start looking at how is price reacting? Are buyers being trapped here? Or are the sellers being trapped here? What does volume look like? What does relative strength look like compared to the tech market? Not to be confused with RSI. I'm talking about relative strength compared to tech assets, right? I start analyzing the full picture. I start analyzing everything and then saying, okay, here's my context. This is the type of trade, or this is the type of analysis that I want to focus on. And just as a quick side note, even when we look at all these labels, by the way these labels work, they're not automatic trades. The idea is the label goes off, then I go look at the chart, or then somebody using the labels goes and looks at the chart, does their own due diligence, and then decides whether or not they can find a setup. It's not about automatically taking a trade. So that's not what this is. But let's just pretend, hearsay, that I took a trade every time one of these things fired off. If we did the math, we're not going to go through everyone. If we did the math, at least a third of these, maybe even half of these, were probably losers. They're probably wrong. At least a third, maybe half. But then if we look at, okay, but how much did the winners make versus how much did the losers lose? That's where the real magic happens. For example, back here, when this went off in March of 2020, or when this went off in July of 2020, or when this went off in the summer of 2021, or when the sell went off right before the bear market really went in full swing, or when these buys went off at the bottom of 2022, or this buy right here at the lows of 2023, or these sells back here. That's how real trading works. It's not about being right 80 or 90 or 100% of the time. It's about how much do I make when I'm right versus how much do I lose when I'm wrong. And so when somebody's doing a YouTube video or they're doing some type of commentary in the market, just keep in mind that no matter how good they are, and there are some really good traders in the world, they're wrong a lot. I am wrong all the freaking time. I lose trades almost every single day that I trade. I also win trades almost every single day. The idea and the goal is that at the end of the day, I add up my wins and I add up my losses, and the wins outweigh the losses. That's the idea. As they used to tell people, like, give me 5 cheeseburgers, I'll give you 3 back, and I'll still be a happy guy because I got 2 cheeseburgers. Stop now, give the video a thumbs up, subscribe to the channel, check the description for a link where you can join my private, free Quiet Quant community. And as always, please remember that I am some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset.